Hello, in this presentation we will record financial transactions related to the owner depositing money into the business as well as taking a loan out for the business within QuickBooks Online. Here we will have a comprehensive QuickBooks Online course soon, if not available yet. We also have a comprehensive Excel course which complements the QuickBooks courses and a QuickBooks Pro desktop version course you can find at the link below. We are on the dashboard for QuickBooks Online. We're continuing with the Get Great Guitars problem. If you've been working along with us, that's great. If not, that's okay. We're going to be entering deposits into the register for the owner putting deposit into the company and for a loan to the company. There's a few different ways we can record a deposit. We're going to record this using the check register. So we're going to go through the check register. Now when you go to the left side here to choose the check register, you might be thinking to go to the banking, but we're actually going to go down here to the accounts and select the accounts, and that'll give us the chart of accounts. So if we select the top item here, which will be the chart of accounts, then we can go into each account, and this is where we can really find a register for any of the accounts. Now typically we are used to having a register for the checking account, and it'll look similar to having a register that we might see with our checkbook and enter the transaction in a similar type of format. So if we click just anywhere on the checking account or select the register over here, we will go into the checking account register. Here is the checking account register. We don't have much activity. It's a new company here. The only activity we have so far is the first beginning balance, which had the $25,000 that went into the opening balance equity. So now we're going to enter another deposit. We're going to say that the owner is going to deposit $65,000 into the company. So we have another deposit going into the company. In order to enter a transaction, it's a little bit different than the on-ground. We have to select this drop-down, and we could select the different types of items that would be happening to enter directly here. Now in this case, we're going to have some form of deposit. So we're going to go up here and say we're going to deposit because the owner's putting money into the account. This then is the checking account and therefore where we will deposit this information. We're going to put the date as of 01/10/21. We're going to be working in 2021, the year, starting January is the first month we're going to be working in. And then I'm not going to put the payee. I'm going to put the memo, which would be owner deposit, so that we know it's from the owner. It's going to be a deposit. Notice I'm tabbing through this. When I tabbed through it, went straight to the deposit screen. That's going to be the $65,000. That's the amount the owner will be depositing. Tab, tab. And then we're going to go through the accounts. We could select the drop down for the accounts. And note that it jumps to the expenses here as kind of a default. We want to have the owner putting the money in, so we're really looking for an equity account. We'd like to have some type of equity. We could see the equity accounts over here. And the chart of accounts that was generated when created in this company actually has an equity account that breaks out the owner investment. So owner investments, here's what we're going to select. If it didn't, we could put it into retained earnings. Is going to be where everything's going to roll over to at the end of the month. We're going to select the owner investment here, and then we're going to say save this transaction. Transaction is now saved, so we have the two items down here. If we scroll a little bit to the right, we see our items and our running balance here to have the $90,000, which would be the 25 starting and the 65 here. We're going to record another deposit, and that's going to be from a loan. So we're going to say we got a loan from the bank, another deposit transaction, same screen. We're going to scroll over. We're going to say it's from Chase Bank. I'm going to select tab. As we set this up, when I select tab, it does ask if we want to set it up as a customer or a vendor or an employee. Of those three choices, I'm going to choose customer here and then enter this information, although it's not exactly a customer because, of course, it's a loan payment, but we're going to keep that there. We're going to have the memo. We could put some here like it's a loan, and we're going to tab. It's going to be the payment deposit then, and that's going to be, for this one, will be $50,000. Tab, tab, and then we're going to have the account. And if we select the drop down, It defaults to those expenses again. We're kind of looking for a liability here. We want to have a loan. So we see here we have a loan payable that is in the books when the chart of accounts was created by QuickBooks as we set the company up. So we're going to select that item. Here's what the deposit will then look like. And we're going to say save that. So if we think about these two transactions, what happened here on this first one is that the checking account went up and the other side went to the equity account in owner's investment. This one, the loan, that means that the checking account went up and the other side went to the loan payable that also went up for the liability. We've got the $140,000 now in the balance, seen here and there. Let's go to the reports. Let's take a look at the balance sheet and see if we can see that same $140,000 in the balance sheet. So we're going to go to the reports on the left-hand side. And let's just type in to the balance sheet. So balance sheet up top. And we're going to change the dates for the month of January. So 01/01/21 to 01/31/21. So we're going to do the month of January for the year 2021, the year we're working this problem for. Then we're going to run this report, run that report. And there it is. So there's the 140,000. If we select that 140,000, then we're going to see the detail. We started at 25,000. That happened the date right before this because that was the beginning balance before the year that we are starting transactions in. And then we have the deposit 65 and the deposit 450. If we select either one of these, we'll go to the deposit screen and we'll see this item here, and here is the deposit amount. The screen looks a little bit different because this is the deposit screen. We were in the register, and so this would be this is the deposit that is generated whenever we make a deposit, the form that will be driving any deposit. Closing that back out. Going back to the original report, the balance sheet. Then we're going to scroll down. There's the 140. Let's see the other side of these transactions. We have the liability down here, and that was it's going to be within this 72,000. So if we select that item, then we're going to see that we started with 22 at the beginning balance, and now we had the 50, bringing us to the 72. Selecting the 50, we will then see once again a deposit. So there's the deposit in the checking account. Closing this back out with the X. Check the one other account affected. Scrolling back up to the top. We want to go back to our report summary. And that'll be the balance sheet report summary. And here's our equity section. It might be a little bit different than what we've been used to before in that we have this investment account. And it's useful to break out the investments. Sometimes they're not always broken out. But here we have the investment broken out to the retained earnings and then the net income. The total equity, in essence, you can think of the total equity as all the same type of thing that could be broken out in different formats. The opening balance is something we're probably going to want to have to adjust for. But the owner investment is something that will be there, and then we'll close out to retained earnings. So selecting that, then of course we see our deposit once again. Scrolling back up to the top, going back to the balance sheet. There's our information here. And note if you're seeing that the opening balance is closed out to retained earnings, that's probably good because we do need to adjust for that. That opening balance is not exactly proper. If we have that closed out to retained earnings, that would look more proper. That is a remnant of us putting in those beginning balances at the start of the company.